on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets closed.
Let's talk execution, let's talk speed. That crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the red. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is a vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promises keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no chains. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 will match traders' speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning. Good morning indeed. Welcome everybody to Wednesday's live session, 14th of January 2026. bear with me as I increase my screen resolution to make it better for you all. I've increased it to 250%, which on my screen looks absolutely atrocious, as it looks far too big for my 32-inch monitor. But nevertheless, how is everyone doing? Did everyone trade well yesterday? I want to do that. Get that higher. What trade did everybody take yesterday? So whilst everybody lets me know what they're trading, what they're doing, how they're getting on for the week, let's talk dollar index. Let's talk the DXY. Let's talk whether it's the dollar peak. So what we're seeing is softening in the DXY. Overall markets are trading in this range, as you can see what I've got printed on the screen here in front of us. As we come into 2026, the Fed Reserve has already signaled that there's going to be at least 2 rate cuts for early 2026. So could that be because the DXY is losing its yield advantage? Maybe. Now, how do we trade the DXY? Well, as you know, 57 to 58% of the DXY is conformed of the euro versus the euro. So we'll realistically want to be getting exposure through euro dollar. So with euro trading and coiling below 120, there definitely could be an opportunity for a multi-year trend in the euro. So other exposure will be cable. Now, obviously, the UK economy, in my opinion, at this moment in time, is not the greatest. But there's been a couple of breakthroughs recently with this is not the correct political term, backtracking of mandatory government ID, and the Lords overruled for guilt the Chagos Islands deal, which both positive signs for the UK. Doesn't necessarily mean that the Parliament and the government in power are doing better. It's quite embarrassing at the moment. The UK is broke, yet they want to start wars with everybody. It's crazy. And that doesn't stand for all British citizens. You know, we do not, our government do not speak for British citizens. Our government do not speak for us. However, cable is another way to get exposure into the dollar weakness on the yield advantage. So economically, there are some signs of resilience from the UK. Let me just reduce the visual screen on this as well. Let me see if I can reduce this, because my visual effects on my camera are making it glitch every now and then. So I just want to reduce that. Done. So traders are looking at 135. Realistically, that 135 big round number is the next psychological barrier of resilience that potentially we need to see trading above. So euro, dollar and cable, there are opportunities there longer term. Now, from a day trading perspective, the way I look at the DXY right now is we're trading inside this range. If we look at how pricing is showing us here, we've got the sweep of this. Just frame that in. We then have a sweep of this, which then goes on to break that support here, which would have been realistically the demand to trade higher if we wanted to trade outside of this lower high range. In terms of where dollar wants to look for the moment, we've got the absolute level at the extreme where the sweep came in, and we can't trade the DXY. So this is just pure TA analysis, trying to identify, is there a way that we can cross-correlate DXY to get long the euro? So we'll take a look at euro momentarily. In terms of breakdowns on markets, we've had lows continuing to print. Obviously, lots of pressure on the sell side to continue trading lower. but we've been met by several points of demand to the left. So here we did have, this flip. This flip into this was really nice. So we had this move to the upside. We flipped this into there. So we had lots of intricate flips. Sweep, supply, flip, failed, retest, continuation to the upside, took out this high. So obviously the demand from the left-hand side of the liquidity is try to hold, which, as you can see, if we were to extend to the right, we've got further buy liquidity trading into the market, which has pushed this level up. Now, again, we've had this sweep here and we've had a sweep here. This is a stronger sweep, but the two sweeps are still valid. So at the moment in time, we're still trading inside that range, which to me suggests that we are waiting for a breakout. We're waiting to see either the dollar weaken, which would then suggest that we could get long the euro or pound. But at the moment, we have to wait for that. But obviously, we can go down to the lower time frame. So let's go down into the 1 hour, just because the 4 hours, of course, will give us a very similar viewpoint. Let me just rein that in. So looking left, lots of volume inside here. Lots of volume, which has driven the price consistently to the upside, creating higher highs, higher lows. Where we've faltered is obviously at that supply side. We've traded back down. But if we look at the 1 hour, we just get a bit more color here. So we're trading inside the supply range on the 1 hour. Sorry, I was just looking at that 100 level where the major level is now. In terms of the range, we're in the middle. And what I've said multiple times is we don't wish to diddle in the middle. So we obviously need to be aware that we are in the middle. Overall, market's trying to go short again because we've traded to the downside. We're now coming back in to respect the extreme of the supply. So there may be opportunities to actually get short intraday on this. I'm just looking to see if there's anything. So, we tried to break here, but we failed to do so. So we've essentially created equidistant highs or equal highs, but market's range bound. So for me, we need a breakout. I need to get some confirmation of where price is trading. Right now, it's just a guessing game. Longer term, you can see that the market in the DXY is in the range. So if I was, I'm not getting anything. Like if you look here, again, very similar PA, right? Traded up, respected this demand, traded up, come into this demand. We failed. Now this low, as you can see, then got taken like that because it was weak. Why was it weak? Because it failed to take out this high, which does suggest that we are either building liquidity to trade higher or that we're looking for that to be liquidity to then trade lower. So no, nothing done for me at the moment. But if we switch out to euro dollar, we'll be able to see what the flip side of that move is. Does anyone have any questions? I see that one person's here to learn, not trade. That's nice. Well done, dude. Did that change? Why didn't it change? There we go. Let's zoom out to the daily first. All right, so still trading inside the range. Again, similar to the DXY, right? Still trading inside the range, nothing done. Come down to the 4 hour and the 1 hour. We'll do the 1 hour. That low was weak. We've traded below. We're trading inside that bigger demand. Overall, price is looking a little bit bearish, if I'm honest, on this leg. I know that we have this extreme demand here if we really want to filter it out to the extreme of the move, which we've got mitigated, but we're not doing anything. So it mirrors my comments on the DXY. Nothing done until we show some form of breakout. You know, yesterday was a little bit choppy. Let me go into London hours quickly, just so that you can see that. So through Asia session, very, very corrective. We then came into post open, we traded up, we then traded to the downside, huge move on this candle, which was around CPI. And then we've just traded lower, coming into the extreme. So not a very good day in terms of higher time frame analysis, in terms of swing possibilities. Let me just clean up this chart quickly. Just get some of the VWAPs out of the way. So again, range, like just look, high, low. These are just visual indicators to show you what's going on. I don't trade with these TAs. We're just creating lower highs, higher lows. So we're caught inside a range. Now, for those that are here to trade this, you're realistically looking at trading from the extremes at 116.5 and looking at buying at 116.30s if you're thinking of trading inside this move. Alternatively, you're just going to be waiting for a breakout. You're going to either be looking for breakout here and then confirmation to get short. If we think Euro's going long in line with the DXY, then we want to be seeing, you know, ideally some form of trap on the downside, and then we want to be looking for longs. But again, we're not just going to get long if it does this. We need to see some form of, okay, breakout to the upside. If we're swing trading it, okay, yeah, you may want to get long on this or wait for the breakout retest, then look for the continuation. Or alternatively, if you're not bothered about missing that first part of the move, waiting for something to come back into or waiting for a break to the upside to then take it to higher levels, then that's fine. If we're looking for 120, bearing in mind we're trading at 116 and just under a half here with change, to me, that's a massive amount of upside. So just zooming back out to the hourly just to try to get a better picture. We haven't seen, let me go to the weekly actually. We haven't seen 120 since May of 2021. And I mean, that was pretty much the huge move to the downside. So if we were just to looking at where, if we were just to look, sorry, not to looking, if we were just to kind of follow where PA's been, obviously we've got this huge area of support and resistance around that 125 level. This was the last point of supply that pretty much took out that low. We've traded back inside it, and that's where we're trading right now. So, you know, if we think we can trade up into 120 with this higher low printing here, do we, the question is on a weekly perspective, do you want to continue buying into supply? It's usually not recommended, but that is the weekly level, not the 15-minute, not the 4 hour, not the 1 hour, not the 5 minute. So there's going to be ample opportunity and further upside. Like considering we're at 116, if 120 is going to be opened up, then, you know, that's a huge move to the upside. So there is opportunity, but right now we're trading in the middle, nothing done. And it's the same stuff we've had all week. The markets have been continuously trading high. So if we look at pretty much the overall tones of the market, you know, we had gold trading up 0.4%, $4,400 a troy ounce. So very sticky around safe haven demand. Bitcoin's remaining steady at around 94,000, so just under 94,000 it was. The Nikkei was at 52,500, which did surge to a new record, up 1.3% overnight. Oil was down 0.3% at about 58 and a bit. Forex, and specifically the dollar, mainly talking about the USD or the DXY index here, was trading at 98 and a quarter. That's drifting lower after weak US manufacturing data. But if we really think about overall kind of tones in the market, 1 second. If I look at that outlook, if I look at my notes, so we look at where the markets are. What do we have to take into consideration? CPI data. So yesterday, CPI rose 0.3% month over month, which did meet expectations. The annual rate settled at 2.7%. So where you look at the most important level of all of that is core CPI. So core CPI, which excluded food and energy, that rose just 0.2%, which was slightly cooler than forecast. Now, what that does is it calms fears that we're moving into, a very hot inflation print, which would definitely force the Fed to cut the corner. It did kind of reaffirm that disinflation narrative, which would lead markets to price back in a higher probability of a rate cut in April, which is good for the markets. So we obviously need to keep seeing softer numbers and some form of disinflationary market, as that will continue to boost the probability on CME Fed Watch to get basically to cut interest rates. Let's look at the US 500, because that was an interesting day. There was a lot of people struggling to trade the US 500 yesterday, or the ES, depends on what you want to call it. We'll go down into the lower time frames immediately because we've discussed the higher time frame. So this is really interesting, actually. I watched a few people yesterday trade this during their live streams, and it's always good to see and follow people and be understanding of how other people trade. And I saw a lot of people get caught in this move. So a lot of people traded this candle, this data on the lower time frame, on the 1 minute, the 5 minute, and they got caught in longs. And I saw them getting caught in longs here, 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 and they got caught in longs pretty much all the way during this pullback because they believed it was going to be trading higher. Now, that's part of their analysis, and that's okay, and they did take a loss. They definitely overtraded during their stream, and that's not a dig, that's just an observation. And what it does do, and I noticed this in their chat, it creates FOMO. It creates relentlessness. It creates people that are chasing the market just to get in a trade. And whilst during that leg there was some opportunities on the way up, people were caught in longs and they were blowing their accounts, and that's not cool. And this was obviously pre-open, right? So this was pre-US Open. So after the data release, the news obviously got faded. And one thing that we used to always talk about when I used to mentor traders was never trade the release, always trade post-release. And I think with prop firms, a lot of prop firms, depending on what firm I'm referring to, some will have restrictions on news trading during the challenge and evaluations. Most won't, some will, and vice versa on the funded side. So most will have restrictions on red folder high impact news, and that's okay. It doesn't necessarily put a restriction on your trading, if anything, right? Because most people will just gamble with news. There's great opportunities in news. I know some very big traders. They're small in the fund space, but they're very big traders, and all they used to do was trade macro news releases. and they were big boys, big punters, absolute huge punters. But coming back to my original thought and process and rule set, and a bit of a training and a trading tip for you all that are listening, whether that's live or in the recording, is don't trade the news release, trade the aftermath, fade the news. So I'm a big believer in fading the news and not getting caught up in the hype. And you'll actually find that you make better returns by fading the news than trading the news. So obviously post-release, we had that fade to the downside. Now this is the 15-minute chart. So over the next, consecutive 5 candles, we had consistent shifts to the downside. Now, if you didn't want to fade the news, then you wanted to wait for actually markets to break to the downside and then retest the levels, then of course what we did is we did exactly that. We faded to the downside. We took out all of the liquidity at the structural lows within this level. We then came back up. We retested the extreme range. We then traded lower. So in theory, you could have got short inside here until the end of the day. Now, bearing in mind, this is London hours. If we go back out into US hours, because of course, during the US, we're trading -5. So we just want to be aware of their timings and their trading sessions. Why? So that we don't get caught on any futures props that we're trading on. And then we obviously could trade the short into these levels, which, we would have realistically traded out somewhere inside here. We may have even got trailed out by this move to the upside around 3:45 in the US. But there was a lot of opportunity. But I think there's 2 big lessons for me in this one. If you're watching people on stream, don't get caught up in FOMO and trades just because they're trading that level. If they're trading this, don't get caught up in it. Try not to get FOMO. Yes, they may make some decent amount of money in that move, or they may make decent money in other moves that you've seen them trade, but it doesn't necessarily, always work like that. And it takes a specific type of trader to be able to scalp news. However, for the majority of the time, they got caught up in that move, and then they had to trade for the rest of the day to make that move up. And don't get me wrong, I did see them pull themselves out of the hole, and they made an exceptional amount of money. And by the looks of it, they're a great trader. But just stop getting caught up in the noise, stop getting caught up in the hype, stop getting caught up in the FOMO just because you want to trade. There's better opportunities to fade news than trade news. And the other big takeaway on that is realistically just wait for the market to develop and actually show its hands. Otherwise, you're just trading hype, and that's not an edge. That will decay your capital quicker than most things. So if we look at where markets are, so the ES is obviously trading at 69.90. Sorry for the zoom. I just have to make it clearer for everybody so that you can all see. 7,001 is now magnetized. So 7,000 is the magnet on the S&P 500. And that was the main reasons for primarily also wanting to short after that data release on my perspective. It was the whole theory that we're now trading above. Let's look for a break and confirmation that we're going to be going short, and then we'll trade back into that 7,000 level. And, we did see that move come in. So we're looking at that level on ES. On NQ, that 25,000 level's been absolutely ruined now. Point of control is now trading at 25,840s. If we come out to the daily and just see where we are on NQ, and it's really interesting. So a lot of people that buy single stocks like myself, a lot of people that invest into indexes, I wonder how many of them actually bought in when we had, the huge dips back in 2025, because a lot of people were very worried. When we had this move, so many people, the news is already out, right? The news is already out. There's no recession. Stocks were selling off just because the indices were selling off and everything else was selling off, and everyone else got caught up in the move to the downside. I do wonder how many people loaded up on their S&P ETFs during that period, because that was an opportunity to really load up. Like, look at this move. So we look at, let's look at this. So look at this, right? It took us 303 days to move 25% on the index. It then took out that whole move in 63 days. That's insane. And then we're now rallying from the highs, which were 6,000 to over 7,000 at the time from here. And loading up on your ETF, S&P ETF, whether you're DCAing at £25 a month, $25 a month, $100 a month, $1,000 a month, whatever it might be, you know, that's taken a new move up 45.83% on that, which is a huge move to the upside. From 5,000 to 7,000, you know, it's 2,000 points. That's insane. Yeah, that's absolutely insane. So where are the eyes now on the markets? Talking indexes, talking big events. So the US Supreme Court on Wednesday and Thursday is expected to rule on the legality of President Trump's global tariffs. If a ruling goes against the tariffs, it's going to trigger a massive rally in international equities. So the DAX, the Hang Seng, the Nikkei, I'm just thinking of other ones that maybe you lot trade. If that happens, we will see a sharp sell-off in the dollar, and we will realistically see a move higher in the euro and in the pound. So it supports my thesis and theory of what I'm talking about earlier. So keep an eye on that data. Does anyone have any questions at all? Any comments? I'm not seeing any, which is actually really surprising. There's usually lots and lots of comments, lots and lots of questions. So either people aren't commenting or something's wrong with the stream, and I wouldn't know. One thing I do want to mention whilst I'm waiting is, if you head over to our website right now, and it's only live for the next 24 hours, head over to our website now, open up the chat box, type to our chat support team the word live stream. So that's LIVESTREAM, and I'm putting it in the chat right now, and you will get an exclusive 40% off any challenge. Okay, 40% off any challenge, valid for 24 hours only. I am also not seeing comments, which is really interesting. I don't know what's happened. I'm just going to let my tech team know, because I cannot see any comments today. That is a real shame. I apologize to everyone that is commenting. I can't see any comments whatsoever. And it's this, I'm on a live stream, so I wouldn't know where they're going if I'm not seeing them in my comment section. Let me just see. Yeah, someone just sent me, but what's really weird is I can't see them. That's insane. I apologize, everybody. I don't like things like that when I can't support. Thumbs up from Akhtar Babar. Thank you so much, Akhtar. Raise my glass to you. What? So, because I can't see comments, I'm just going to continue talking. I'm going to continue going over the indices. I'll go into Bitcoin as well, because I know that we tend to cover that. And actually, let me go over gold first. The most traded instrument of Seacrest Markets. Let me go over that first, because I know you'll all want that. Now, we had a bullish range on gold. As you can tell, I'm massively bullish gold. I discussed this on all of my live streams, how we've been long gold since 2017 and 2019, when we bought 1 kilo bars for like 37,000 euros, which is, as you can see, it was about 125, 130,000 yesterday, which of course be higher today, which is nice. Overall, markets are bullish. We've traded up at that 4,500. We're trading up at 4,600 and a quarter with a few pennies. And after it's hit that record of above 4,600, it's currently consolidating around those areas. And it's primarily that debasement trade that I've gone on about for days now, which will be buying gold to hedge against the weak dollar. And that remains the core theme. We're obviously seeing it as well in silver. So silver obviously broke above that $90 an ounce, which, again, first time in history, which the fact that silver is up nearly 20% since the beginning of 2026, which, again, is driven by a combination of safe haven demand, as well as the deficit around supply across the industrial sector, is absolutely mental. But there's also that theory of, okay, well, I don't really want to be paying for gold up at these levels. What else is out there that potentially gives me that safe haven asset status, whether it be palladium, platinum, silver, gold? You'll start to see precious metals across the board increase in value, which, as you know, the CME have continued to increase margins on metals, which you'll see being passed across to brokers and prop firms accordingly as well. Coming down into the 15-minute on gold, just to get a little bit more of an intraday price action. So let's look at Tuesday onwards. We had that high that got swept. We then had the lows that got swept. So high was swept, which means we were targeting this low. So this low was weak right here. What happened? We tried to get that demand to be respected. It reacted. It failed. We then got a sweep. So after this sweep, give me 1 second. After this sweep, in line with higher time frame analysis, we want to be looking for longs. Now, whether you're going to be looking for longs once we trade higher, or whether you're going to be looking for longs once we get in here. So if we come down to the 5 minute, just to get an idea of where PA is, we had that gap up. I mean, this was really late. You know, this move, 1 second. This is, yeah, that's fine. So I think we were trading on, yeah, okay. So we are trading on London. That's fine. So this was a really late move in gold. So we had the short. So the shorts were the move during the session. Overnight, the longs came in, right? And then Asia's drove it higher. And it's really nice. Like, the volume inside here is definitely strong. Pretty much everything's being matched. Moves to the upside. Because we've swept, this high is now weak. So what are we targeting? We're targeting this high. Now, depending on how you want to get long, is entirely up to you, depending on yours. Me, personally, I'd be looking for getting longs from inside somewhere in here. So, you know, just as a rule of thumb, I'd be looking to get long somewhere inside here, stops below the sweep, and then I'd be looking to initially target the highs. RR's okay, you know, 1 3/4. which is the move. And then, of course, up to you entirely how you want to scale in. And I'm sure on the M1, M2, there's probably multiple opportunities. But if you just look at where the markets are, the spread would have been pretty big overnight, you know, coming into rollover. Yeah. I'm just trying to say, there's someone sending me the messages because I can't see them. Would I trade if trading doesn't have money involved? Just trade for fun? Let me know. Okay, so very subjective question. Realistically, so the first question you got to ask yourself is, if you don't trade for money, it's just a game. So if we were to look at trading as a game, then no. I rarely play games. I don't see the point anymore in wasting time playing games. Your adult life is very important. You have responsibilities. Every now and then it's okay and to have fun and play games. If you've got young children, they're going to want consoles. There is a period in time where you'll have nostalgia and you'll want to play games that you played when you were a child. You know, the Nintendo 64, for example, James Bond 007, or Pokemon, or Mario Kart, or Crash Bandicoot. You know, maybe even going back to, you know, the Sega era, or Atachi. So there's a time and a place to have a bit of fun with games. But so many spend their entire life on it. Okay, and I get that. E-gaming is massive, and there's reasons to do that sort of stuff. But if trading was just a game, then I don't play games. So realistically, no. Not for the period of time and for the long durations that you do. If like, that's the summary. I wouldn't do trading if it was deemed just a game, if there's nothing to take from it. The end of the day, the reason people trade is to make money. That's the end goal. That's it. And it would be the same, realistically, if you didn't need to be a professional e-gamer or a professional esports player to make money in the gaming industry. If you could just go and play, I don't know, Call of Duty or Grand Theft Auto or some form of other game, whether it be a strategy game or whether it be a racing game, and you could actually earn physical cash from playing it without being a professional or without being a YouTuber or without being a streamer, then everyone would just do that because it's easier, right? But there are times for playing games, strategy games. There are times for playing games for chill downs and wind downs, and there are times for being nostalgic or being a good parent or being a good friend and having some fun on a game. But when you look at the duration of time that you spend in trading and the hours, effort, pressure, psychologically, mentally, looking at behavioral finance, the time that people spend in their trading accounts or in their investing accounts, you wouldn't do it if it was just a game. So that's my personal opinion. Like I said, there's a time and a place for games. And I used to love playing games when I was in school. Lots of strategy games, lots of board games. Strategy board games were my favorite. Lots of times spent playing cards. But once you have a lot of responsibilities, you've got to really prioritize life. whether that's your career, your job, whether that is trading, whether that's investing, whether that's working for a firm as an employee, whether that's doing all of that like I do. It's entirely up to you how you designate your time. But outside of the office, you need to be moving. We spend so many hours at our screen that our body stiffens up. Now, bearing in mind, I've been doing this nearly 20 years, if not more than 20 years. If I look at it from pure professional standpoint, then it's under. But in my early days, I used to spend up to probably 18, maybe 20 hours a day in front of the screens some days. And that would include being away from a physical desk, but still being at the screens at my home, maybe in my bedroom when I was a lot younger. However, we spend so much time at our screens. We need to get outside. We need to go to the gym. We need to train. We need to keep fit because our body will seize up. Otherwise, you will get problems. Your hips will seize up. Your posture will start to reduce. You'll start to lose strength in your lower half of your body. So your thighs, your legs, your hamstrings, your calves will all stiffen up. And you'll have problems with your lower back from your thoracic spine down into your glutes. And I know this is moving more into a doctor's session right now, but they're things that you need to consider. There's so much more to life than just being at the screens, being a trader, being an investor, being in the markets. So you have to really balance your time, and stepping away from these screens and your job and your career, or stepping away from job, career, then coming back and doing this and doing your screens, then going to play games. You're sedentary. You're sitting down the whole time. And that's not great. So coming back into markets, longs overnight, we were talking about that. For me right now, again, we're ranging until New York. I would want to see, this level taken out, 4,600, continuing the theme of these higher lows that we're seeing. So high low. This is actually weak, this low, but we're ranging. This low is weak. Why is it weak? Because it failed to take out this high. But it does look like where demand is in control overall, that buyers are able to keep it at this moment in time. So it's protected at the moment. We've got these highs. These highs are weak because overall we're long, we're bullish, we're in an uptrend. Yet we do need to obviously bear in mind that we could see some short-term sells off of this level just to pressure longs, because what we want to see really is we want to see people getting long in and around here. We want those longs to be trapped. We want to bring price lower. We want their stops to be taken out of the market just because that's where their stops are, not because they're being cascaded or hunted. And then after that, we want to get long. And that's realistically what happens. But you've also got to factor in that up at these levels, we're going to get a lot of euphoria, a lot of FOMO, a lot of people buying in. So we do need to bear in mind that we could see some selling pressure up and around these levels. It's a real shame that I can't see these comments. Let me see what I can do. Duplicate tab. That is fantastic. Now I've done that, I can see all of the comments. Can you touch Kiwi dollar? I can take a look. I do play chess, Saucy. I'm just going to catch up on all of these. Hi, everybody. Hi, everybody. Yeah, 40% off, valid for 24 hours. I can definitely touch on Kiwi dollar. This is an exciting offer, not an existing offer. The 1 hour looks good for longs to me. Nice. I think a break above that zone will be cool. Gold touching it at the moment. Bullish DDY or bearish? Well, overall bearish if we break below, but at the moment neutral. I'll touch on Kiwi dollar in a minute. Gold, yeah, nice. That was the last question, Starboy R2M4N. So I hope you enjoyed the answer. Any big news to track today? Oh no, I feel attacked. No, you don't need to feel attacked. Listen, games are valid, but you've got to spend your time wisely on them. Hand-eye coordination. This is the point. You spend all your time doing that every day, right? At your screens, hand-eye coordination. Trading, hand-eye coordination. Playing sports, hand-eye coordination. Whether that's tennis, golf, paddle tennis, badminton, squash, football, obviously from an overall movement perspective. If you're a goalkeeper, hand-eye coordination. If you're crap out on field, then hand-eye coordination through handballs. If you're doing some form of martial arts, like we do I do kickboxing. So there's a lot of movement and activities that you can do that are away from the screens, right? Prop firms have regulations. Is that a statement or a question? Because there's no regulations in the prop industry, but there are rules, as you can know, by multiple prop firms. The only one that I'm seeing recently, which is really interesting, is MetaQuotes. MetaQuotes are allowing prop firms back if they get a legal opinion from SO. Time management is very important. Yeah, correct. Better things for just fun. Correct. I work out 5 days a week and play football every Saturday. So you're like, listen, you are able to say I can play games. If you've got no other responsibilities, maybe you've not got young children, you've not got maybe a partner, and you have time, games are valid. And that's not a problem. And that's pretty much how I programmed it and how I mentioned it. I'm an extraterrestrial being. But yeah, same for me. You know, I have a gym next door. I work out every morning. I work out on the weekends as well. I do kickboxing every week. I try to do a lot of walks as well. I'm looking for a trading word. Probability says, Wiz, that she'll be a better trader than you. Because women statistically are better traders than men. Statistically. Based on history. Doesn't necessarily mean that's true for today's age. Let me look at Kiwi dollar. I don't trade it, but it trades very similar to Aussie dollar, Euro dollar, etc. So similar scenario. DXY is going to be looking for shorts. The DXY is going to be looking to go lower. So realistically, once we get that breakout, we'll realistically be looking for a breakout to the upside in Kiwi dollar. If we come back out to the daily, let's see where we're priced at the moment. Absolute longer term has been bearish, right? We're creating lower lows, as you can see, lower highs, but we're now trading inside of range like this. So either if this high is strong, this low is weak. Now, we realistically mean we're going to be trading down into 54s, but because this is now printed at a higher low, there is that opportunity again that we are consolidating like so. Let me just clean this up a little bit. You know, there is that chance that we're looking at this. So we've seen respect of this overall demand range. We've then traded above supply. You can see we've got reactions inside here. We might just be trading back down into this range to fill this imbalance that we've got. As you can see, we've had the change of character, which is here. Like so. So I'd expect price to be trading lower. And then realistically, we start to look for longs from there, which will be in line with the overall play and thesis that the DXY is going to go short. If you find one, please ask about for her sister. Oh, Saucy and Wiz double teaming on the stream. I mean, there's lots of women on X that call themselves traders that you could probably take a look at. Thank you for touching. Anytime. You know, any instrument, any asset, not a problem. Any cross, you ask it, I can cover it. So coming down onto the 4-hour, 240-minute chart, you know, we can see that there's lower highs, lower lows being printed. We've come into this demand area, which has been respected. So there were people potentially going to be looking for longs, and that's okay. if obviously we were looking for the overall theme of longs, which after this break to the upside, we do need to see, okay, if demand's trying to take control, we need to see supply fail, and we didn't see supply fail, so you wouldn't be looking for longs, right? So my comment of people would be looking for longs is on a low probability basis. And for me, if we look at this, we've traded up, we've respected demand. So this high is weak, right? So this demand is strong for now. Oops. This demand is strong for now. We want to see supply get taken out and trade above these levels. Supply was respected here. So, okay, now we're looking at, oh, well, we haven't taken out any further. So this is weak. So, okay, this is now weak. What's going to happen? Price rolls over. We then trade lower. Okay, so we've now taken this. This is an area that we want to be shorting from. And we'll be looking for shorts from inside here. But again, we've got this level here that's ideally going to be weak because we're looking at lower highs being printed, lower lows being printed. So we want to be looking for shorts from those levels. We want to be looking from shorts from those levels, but being mindful that we may need to be taking profit from inside here. I'm just looking at overall, again, we've taken this. It's very choppy PA, but in line with where the DXY is, we want to see the DXY show its hands. Primarily from that perspective, you're going to want to be trading euro. That's it, because the fact that it's made up of the euro primarily is where you want to look. There's that huge support level here as well at 54s. So it does just look like the Kiwis actually just short. Lower highs equal lows, lower highs equal low, lower high, higher low. So now we're starting to put in higher lows. So we're either going to get a break below that, come into the equal lows. Maybe if that low fails, we'll look for shorts. But other than that, it's really tight now. And for me, if the DXY thesis plays out, this could be an absolute fantastic long. It really could be. I couldn't find any. I've been searching for 5 years. I mean, there's loads. There's loads. I think I know 4 off the top of my head. Maybe, no, actually 6. I know 6 off the top of my head that are very outspoken on X. And that's okay. And I mean that in a good way. Supply has to fail to see demands form. Realistically, yeah. There can be times in ranges where both supply holds and demands hold. Just remember that. And sometimes you could get a level holding even though supply has taken control. So sometimes you might see demand being respected only for price to pull back into another supply level to go short. So the question will always be there, well, why was demand holding, or why is demand holding when supply is in control? And the flip side of that is, why is supply holding if demand's in control? So sometimes you'll get something like this. Let me just come out. So sometimes you'll get something where demand is in control, right? Like this, yet supply holds, pulls us back into demand, only for us to then continue higher. So sometimes we need a range during an overall market. So the range will form as an accumulation or as a distribution so that it gives buyers or sellers the time to get price back into a balanced area to get long. Metals holding very strong. Yeah, exactly. Covered that a bit earlier on the stream. Gold, silver, platinum, palladium, etc. All very solid moves at the moment. Highs that are weak. Can you briefly explain the concept of strong and weak highs and lows? Yeah, so I can't remember what I spoke about it on, but if, for example, we're in, let's say we're in, we've broken out of a range, right? So this is our range. I'm just trying to think about how to draw this. So this is a perfect example, actually. So if demand's in control, you know, and we're denoting this by higher lows, right? If demand's in control, all of these highs are weak. So the supply is weak. So from a supply perspective, and the reason that is because when this high was formed, as we didn't take out this low, this high is now weak. Okay, same for here. This high is weak because we failed to take out this low. This high is weak because we failed to take out this low. Okay, so that's the concept of weak highs. And all it basically means is if the peak high or the peak low failed to take out the opposite side, that is then weak, right? Or the demand is then weak or the supply is then weak. So let's look at, so in a range, right? In a range, both the highs and the lows are weak because they're failing to take out the previous side. So this demand is weak because it failed to take out this high. This supply is weak because it failed to take out this low. This high is weak because it failed to take out this low. This low is weak because it failed to take out this high. This low is weak because it failed. It didn't, but sorry, that's my drawing. It failed to take out this high. And this high is weak because it failed to take out this low, right? So both sides in a range are weak. What we need to see is one of these areas, whether it be the demand or the demand or suppliers or the buyers or the sellers, we need to see them take out a level. Now, this low is strong because we've taken out this high. So the expectation of price is for whether it be something in this leg, like another point of demand, or whether it come back to the extreme, the proximal of the move, the maximal, we then look for longs. And that will be continued throughout the themes. So now we've taken out this high. This leg is strong, and we'd be expecting for price to come back into demand. So it's essentially the ebbs and the flows in the markets, right? Hopefully that explains it for you. No worries. Expecting a rebound in the NASDAQ. I touched upon it earlier, so if I come back into the NQ. We need some background music in this live stream. I have asked for it, but I don't know where it is. I'll ask again. I'll ask again because it's nice to have a little bit of background noise. Why is my heat on? Thank you. See, like that. Easy done. Let's go. That's great. Bangs in gear. So now we're looking at this. So we've had that low taken. Overall, we're in an uptrend. Bearing in mind this is the daily. So we're trading inside that range high or that structural high at 26,000. I mean, high lows being put in, internal higher highs are being put in as well. But every time we come into this supply side, we get a sell-off, sell-off, sell-off. But notice something. This sell-off, this sell-off, this sell-off got shallower. We're trading higher, yet we're not making new highs. So it shows us that at the moment, the sellers aren't able to take control and we're not able to push price lower, which suggests that, yes, we are looking for this level to get taken out. But it potentially could just be the fact that we are just consolidating like this and we're looking for a breakout to actually get short, because everyone wants to be long now, right? But this is that this is the theory of weak highs here, Wiz, as well. So what we're seeing is this high is strong, okay? So bear that in mind. This leg here failed to take out this low, so this high is weak. We took a little bit higher, so you can see we traded higher. This leg here failed to take out this low, so this high is weak. This low is strong, this low is strong. Right, so if we now want to see a shift in overall range trading and actual momentum, we want to see momentum come into the market, we need to see lows taken. We need to see strong lows taken, like so. And then once that low's been taken, we need to see supply take control. And then because we're in an uptrend, we want to see 2 breaks, right? So we then want to see another break, come back in, and we can look for shorts from the second. That's what we call confirmed. This is unconfirmed because we've only broken once. It could still trade higher. But ideally for an established trend to trade, you want to see lower lows, lower high, lower low, lower high. And on that lower high, you want to look for a confirmation on the lower time frame, ideally to get short. Once we break lower once, that just means we're bearish unconfirmed because we haven't confirmed that supply has taken control. We need to see for a shift confirmation that we're actually trading to the downside. Just because we get one break below, it doesn't mean that we're now bearish. It just means we're bearish unconfirmed. We need to get confirmation that the price actually wants to trade lower. I don't like trading indices short. It happens, but you have to remember that the downside is limited. I love to see ascending triangle patterns for shorts. Yeah. I think a breakdown above that zone would be cool. Oh, sorry. Good instrumentals, AO2, AO2. I'll ask the team to check them out. I kind of like this music. This is good music for me. We'll find a better genre for the background music. I'm happy with this. If you lot are happy with this, we'll keep this. If not, we'll mix it up. We'll add new mixes. It doesn't matter. The focus is on the charts, but it's good to have some background noise. Does anyone have any more questions before I leave? Remember, if you type in live stream in chat support on our website, again, we have an exclusive 40% discount for 24 hours only. Do I see more longs? In which instrument? ETHUSD. Good trade, by the way, Wiz. I saw you take that trade. And I know we were talking about it. Do I see more longs? So this is you talking your book, right? So you're being very subjective because you want me to say yes. Let's look at it realistically. And let's look at it from a technical perspective. So higher lows being put in on the market. At the moment, we've had a break to the upside. So we've got lower lows, lower highs. So again, this is a really interesting concept. So what's happened here? And hopefully we can talk about this. So this high is weak because it failed to take out this low, right? But one thing to note is that it did take out this internal point of structure. So it's tried to get its strength, hence why we've rejected it initially, right? Because we've taken out an internal point of structure, which also was strong because it took out this. But essentially all we've done is we've traded low into this demand. We've traded higher. We failed to take out this level here. And again, every instrument right now is presenting the same style of analysis. Lower highs, higher lows, a lot of range-bound trading markets. We're waiting for breakouts. So remember, we're only in the second trading week of 2026. That means we have 50 weeks left of this year from a trading perspective, which actually is 49 because of 1 week. We have 49 weeks left of this year to trade. This is 1 month. I'm seeing a lot of incredible payouts across Seacrest Markets. and across the trading communities and trading spaces. But don't get FOMO. You know, we've got 11 months, 40% off. Oh yeah, 40. 9 and a 0 are next to each other, so my apologies. I must have put it on the top one rather than on my num keypad. I can't even edit comments, but it's 40% off. 40% off. I'll just put that in there so no one comes and says, oh, but you said 49. I said 40, but I typed 49, so I've now corrected it, so it's out there. So this high is weak. We've created a higher low and a lower high, so we're ranging. You know, if I come down into the way I'd like to see things, I'd like to see this high get taken. I'd like to see us actually take this and then be looking at, you know, trading back up into these levels. First point will obviously be this level, so 3,692, so 3,700 will be first level. But again, because we're trading inside this, we could easily just drift back inside that pattern, but we need to see demand hold first for us to say, okay, let's continue longs. That's a big move. Again, theme of DXY, we want to see longs in risk. So I do see further longs in ETH, but I want to see this. I want to see a retracement into something. I want to see a retracement into 3,200, 3,100 would be really nice. And then we can continue looking for longs. That's, you know, that's if we hold that level. I'm not just going to say we're long. It does look like we want to go lower. So we'll see. We shall see. But other than that, everybody, it's been an incredible live stream. As always, an honor and a pleasure to be hosting in front of every single one of you on behalf of Seacrest Markets. Remember today, trade safe. Don't get caught in the noise. Don't get caught in the chop. Wait for the levels and markets to show its hand and then take your trades. But other than that, please join me tomorrow. Same time, same place, same great analysis, same great opportunities. But other than that, thank you everybody for joining, and I'll see you all this time tomorrow.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets, light in the dark.
Seacrest Markets leading the way, making the move every single day. Shots in the vision, mindset